Alright guys, welcome back to the channel, and if you're new here, thanks for stopping by. Hit the subscribe button now as each of the videos builds upon the previous day's analysis. I'm at an exciting new location today, my new home for the long-term subscribers. I've got some photos later in the video of the renovations here, but for now, let's have a look at some of the most shocking charts over the last several days, especially for the bears. It does not look like there will be second chances for anyone expecting much lower prices from this point for Bitcoin, for the stock markets, most likely for real estate, and of course cryptocurrencies as well. You've met your home of macro cycle analysis with me, Jason Pizzino, as I said, covering Bitcoin, cryptos, the stock markets, and the real estate cycle. If you haven't already, smash up the like button. Let's get straight into it. There was some massive economic surprises over the last few days. Taking a look at the data from those economic releases here. This particular study looks at the City Economic Surprise Index, which turned positive following an extended period of negative territory. Now, essentially what this is showing us is there was a long period of negative territory. Basically, people were expecting a lot of bad stuff, which they often do. We know that that's part of the wall of worry, and then it flips into the positive. Now, a couple of metrics have to be met here. In this case, you can see the consecutive number of days within the Citigroup Economic Surprise Index. They're looking at times here where it was over 100 days in a row that it was negative and then flipped positive. Essentially, this shows that over the course of 12 months, it has a very strong likelihood of further upside to the S&P 500. The median increase is nearly 16% over that 12-month period. So this is from now until October 2025, potentially a 16% increase for the S&P 500. So what exactly would that look like? Well, we've got to go pretty high up on the chart to get to a 16% here from roughly 5,700 points. 16% takes us out to about 6,600 points for the S&P 500 if we are just going straight off the median returns for the S&P 500. Now, I know you're here for Bitcoin and some of these shocking charts, a lot of the data that is suggesting we're not going to see significantly lower prices at all for this remaining stage of the cycle. But the important part about reviewing the S&P 500 and the traditional markets is to give us a reading of what the traditional finance is doing. It's very unlikely that we would see Bitcoin or cryptos go up if the rest of the markets, where the majority, the absolute vast majority of the money is, 99% in the stock markets, in real estate and so on, if that was looking weak and those markets were going down, it would be very unlikely that you'd see Bitcoin and cryptos pump. But what we are in fact seeing are positive economic readings. As you can see here, we scroll to the research or the summary. Economic reports have surpassed expectations over the past 3 months, driving an index that tracks the data series into positive territory. Historically, similar patterns have provided a tailwind to equities, meaning they're most likely going to go up over the longer period, 6 to 12 months, particularly benefiting cyclical sectors. The 10-year Treasury yield typically climbs as stronger than expected. Data indicates a more robust economy than economists had forecast. Surprise, surprise, they were forecasting downsides, they were forecasting recessions for the last several years, and again, they have been proven wrong because they are always looking at the wrong direction here. The direction is the 18.6-year cycle. I know I talk about it a lot, but hopefully you're starting to see how it plays out year after year after year, which is why, or part of my thesis is why we're going to see Bitcoin and cryptos also take off as well, especially the stronger ones, which I'll have a look at later in the video. But essentially, this is where we are here, roughly around there. It doesn't matter if the yellow dot is here or slightly here or there. I know people get a little bit hung up on it, but essentially we are here. We're in the winner's curse phase, a rough 2-year period, which has begun and we're in it now. There's no exact points to tell us that the bell is ringing at the top saying get out of your positions. We just got to manage it day by day, week by week, month by month. But as we get closer to the dates here, roughly probably late 25 into 2026, that is the time to be on high alert for any sort of signs that we might be beginning the rollover. It's not going to be straight up and a straight down. I'm not looking for that at all. but it will probably be more like a bit of a rounded thing and then starting to come down and then very quickly drop off a cliff's edge, which would be closer to the lows. That could be a year out from the exact low, but the majority of the damage would likely have been done by then, just like what happened in 2008. The peak was late 2007, and then the market started to roll off the cliff. And then you had October 2008, which was that big Lehman Brothers collapse, September, October. And basically the damage was done by that point, meaning the downside was done. It still took several months until it found a bottom and then started to take off, which is why we look at the peak and collapse being roughly 4 years. Last cycle, it was about 6 years. Maybe this time will be 4 to 5 years. We don't know yet, but it's a long way out from that point. So we're seeing positive economic signs here, at least according to the data itself. I know people disagree with it, but I'm just referring to the data points, and then looking at what it has shown up in terms of the summaries here. And that's what we can expect. About an 83% chance of higher prices, just according to this one piece. But as I said, looking at all the other pieces of data that I show on the channel, there is a lot lining up here that we're going to see higher prices for the S&P 500, which is a good sign, good news for Bitcoin and cryptos if you are speculating in those markets. Now look at the fear and greed index is also sitting in greed for the S&P 500. We have seen a flush out here through July, August, and then also in September again. Plenty of different reasons why we had to get a recession. Obviously, we've seen the Middle East conflicts. We've seen the yen carry trade problems. We've seen so many different things. Meanwhile, the markets have continued to go up, or at least pause to consolidate for that bad news. Now, on that, we also looked at the possibility of a volatile October, but seeing as we've had a volatile July and August and September, maybe we're trying to process and digest the moves that we've seen through that period, and now October might not be as volatile as those moves. If you're not watching a chart, it might feel and sound like it's more volatile, but when you look at a price chart, you can see here from the 1st of October, the market really has gone nowhere. Doesn't mean it won't continue, maybe it could go further, but in terms of these significant falls, maybe we've used those significant falls up. And so I want to show you this red line here, which is from our October market performance, looking at the last 21 years and also election years over the last 70 years. And all I've done is put a red line for this particular swing, down and back up. So basically a down and up, down and an up. You can see on the S&P 500, it might look something like that. Maybe down to the 56, maybe back up to 57 or 58 by the end of October. And at the end of the day, I could be completely wrong, and this could be way stronger than many of us expect. Front running an election outcome or election result that just shoots this thing off within Q4. So if we take a look at some of the other items that I've looked at on the channel, we've got October volatility, just explain that. Maybe it's not going to be as volatile as those previous months. 4 to 5 week volume fill, just looking at the price action itself and the possibility of it getting filled back to the strongest volume. And those strongest volume days started somewhere around here. So we could see a bit of a drop off, which lines up with the October movement as well. So from this one here, that bit of a roadmap, and then coming out to the end of the month to push higher from that point. Essentially, I'm just looking at how the market might have got a little bit ahead of itself and then comes back to fill in that volume with more interested buyers stepping in at significant levels, or levels that they find significant. That could take us out to the end of the month. So that's what I said here, 4 to 5 week volume fill. Now, October 1st, it was a red day. Q4 likely to be green. Again, something else that we're following. So let's see how that pans out over the coming few months. So other big things that have been going on, which I think is going to be very effective for Bitcoin and cryptos, and a bit of a curse to bears or anyone really hoping for lower prices on Bitcoin. I think it's going to be a very bad idea to hope that Bitcoin gets under sort of those previous lows of August and September. Other reasons being is that we're seeing more strength in the stock market in China after they talked about pumping more money into their system. I've given timeframes of how long I think this move could potentially last, just going back to China's entire history here on the chart. We're following the 14 months first, then the 25 months, then the 29 months. And China has essentially done in 4.5-ish weeks, nearly 50% on the stock market. There is the low. There's the high at about 48%. Obviously currently sitting at 34%, but it's been an absolute monster gain, breaking 50% and now coming up to test some of the more significant monthly swing tops. So keep an eye out for that over the coming months, as well as more money floods into the system into this last final winner's curse phase of the peak. Winner's curse essentially means everyone is or should be making money because the markets are going up, and the curse is they think they're going to do it forever. That happens every single time. So try not to get caught in the curse. I'll do my best not to get caught in the curse either. The US dollar is showing some strength here. Now, I thought I'd bring this up because we've been tracking it. If it shows strength, often that puts a little bit of pressure onto other assets. We're seeing a little bit of that with BTC, obviously getting rejected on the short term here, getting all the way up to 64,500, slam back down to 62. Reasonable volume here, so as long as it holds out, it could climb a little bit higher. But before I get too far ahead on the Bitcoin analysis, the US dollar has shown one of our infamous signals here, exclusive to the Investor Accelerator. If you know how to use this signal, it can make you an absolute plethora of gains. Understanding these turns. More importantly, it'll allow you to read the market with far more confidence. If you want to learn about that, links are down in the video description. The TI Premium membership, looking at this 3-day rule, knowing when to use it. People try to use it too often, but it's very particular. And if you get it right, it is going to help out a hell of a lot. Now, the rule here is looking at days that are up, higher highs, higher lows from significant turning points. Could be a high, it could be a low. In this case, we have a significant low come in on the 18th and again on the 27th. So basically a double bottom here, and then it has fired away from that point. Green arrows to the upside from that low point 3 times in a row. TIA 3-day rule there. Now, this rule works fantastically well on the US dollar, which then allows us to identify maybe Bitcoin might show a little bit of pause, consolidation or stability, or if it is going up, in this case, maybe Bitcoin will show some weakness. If it is going down, the US dollar that is, maybe Bitcoin will show some strength. So that's how we are able to read it here. Now, in each of these pretty significant lows, which what I'm calling very significant lows, I'm looking at the previous history. It's been many months before those levels were broken and the new lows were set. You can see the rule happen again, green, green, green. It fired on the 3rd day. And then this low here in December 2023 was not broken until now, until September of 2024. So a 9-10 month window there for this rule that signaled you got a peak, and then the market's basically taken 9.5 months to come and break that significant low. So to me, that is a significant low. It happened again in July 2023, very significant low, ran it all the way up to the 50%. Again, the rule signaled here, it ran up. It was getting, it was a pretty weak rally, but it didn't break that low until April of that same year. And then again, going back to January 2021, the rule again showed the exact low of this downtrend. That's what this white arrow is here. 3 days up, bam, bam, bam. And then you didn't see the market go below that low for that entire run. We haven't gone below that particular low now for coming up to 4 years. All right, and that brought in that final bull market top. Again, the rule from the peak down. So using the 3 days down, bam, 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 3 red arrows this time, which brought on a very significant crash. Again, going back, you got the lows and the highs. You can continue to follow this up time and time again, using again swing indicator, turning on the bar types. So turn that off or turn that on to show those particular arrows and colors there to let you know about when those signals should be occurring. So what does this mean for Bitcoin right now? Well, this is probably the one and only possibility for the bears that they could get on board, because you're starting to see some strength in the US dollar. Now, this could last for a little bit longer than previously thought, but we do have several resistance levels overhead, 103, 105, and roughly 107. So the US dollar's got a lot of work to do to get back above those levels to basically show a ton of strength and that this downtrend is over for the US dollar. That could happen. You got a fair bit of time there, and that's probably the one thing there for the bears. Now for the bulls. So we've looked at the overall cycle. Things are looking pretty good. The market sentiment is also stabilizing here. We just had another reading at neutral at 49. The day before was 50. Last week was 50. So you're seeing price stabilize. You're seeing market sentiment stabilize. You're seeing higher lows forming. And we got an overbalance in price the other week, breaking past $65,000. So pretty good signs here that the low is forming, and it takes some time. We've talked a lot about that as well, especially when we saw our bearish signal at the top, knowing that we would be underneath the old all-time high, using probabilities for roughly 4 to 6 months. We're into that 7th month, and this could be that time where the market might front run the movement up now leading into that election, and we start to see Bitcoin break past 70K, 80K. I want to get to those numbers in just a sec. So on to the major shocking charts here. I'm going to start with the larger time frames and just show, or at least using history, how very unlikely it is for Bitcoin to break down from significant lows and to not get your hopes up that we're going to see these big pullbacks, right? So the first chart I've got here is the quarterly chart in the previous cycles. Here is the previous cycle, then the cycle before that, and then the cycle before that again. So looking at the quarters themselves with our Gann swing indicator on, showing us what the bars were. So the greens are higher highs, higher lows. The gray dots are basically lower highs and higher lows. So they are contained within the previous bars price data. And then the red are lower highs and lower lows. If there is a blue, there's one right there. It has a higher high and a lower low. So basically an outside bar that has a big range. So in these bull markets, it is very unlikely that you see more than 3 in a row that are basically in an uncertain trend or down. The only time we got that was last cycle with COVID, and without COVID, it probably would have been stable and probably heading up there with a green, but it's there. So we have to use that data point. Looking at the previous cycle to that, you had a gray and a blue, and then it was basically up from there. Green, just digesting the move, another green, digesting the move, and then away it went to that peak. So it was 1, 2, 3, 4, 5 quarters. So that was after the first 6 quarters. Okay, so from the low to the last time it was undecided here. So there's the gray, 6 quarters, and then it went ballistic for 5 quarters. So let's have a look at 6 quarters here. That takes you out to that gray peak there. So there's your 6 quarters right there. And then it basically went ballistic for 1, 2, 3, call that a peak into the 4th, a gray, and then the final peak there. And then the cycle before that, 6 quarters. For reasons we've talked about before, I'm using the October low. There's the peak. And then 6 quarters takes you out to that particular gray dot. You had a green, a gray, green, green, gray, green. So the grays aren't the worst. It was a huge move to the upside. It had to digest and then continued to take off from that point as well. Here we find ourselves with many green quarters in a row. Didn't feel like it at the time, mind you. Who would have thought 2023 was all up from there? No lower lows in the quarterly chart. But now we find ourselves with 3 quarters of indecision. We're not finished this quarter yet, so quarter 4 of 2024. But if we just take a look at that, where's 6 take us? Well, it takes us to this bar here. And in this case, we had the red there. So history would suggest that it's highly unlikely, not impossible, but highly unlikely that we're going to see a breakdown of the previous quarter from this point. And it's more likely we would see higher prices from this point. And on top of that higher prices, it's probably going to be pretty ballistic. They were the ballistic quarters after the indecision and digesting of the moves and the news and the narratives and all of the possibility that the world was going to end. Remember, we did have COVID in here, and we had many other reasons why the world was going to end there. We also had many reasons in 2018 while you had this bear market, while the world was going to end there as well. And then again, going all the way back to, you had the 2015 stock market corrections as well that lasted all year. So many reasons why the market should have continued to go down and crash a very long bull market. It didn't happen and basically skyrocketed from that point. So that's case number 1. Do we need more cases for everyone? Well, Why not? Let's have a look at those right now. And I just want to take a step back to the time frames now for the election and where we currently sit. So that's this particular chart right here. So the election is this gray line, and we'll look at 4 weeks prior to the election, 4 weeks after the election, and what this could mean for the price of BTC. And of course, that also goes for cryptocurrencies as well. Bitcoin would run, and then likely cryptos to follow. So gray line election, 4 weeks after. That's where we currently sit. So let's take a look back to 2020. Now I'm going to just use the measurements here for the previous moves and looking at where the correction is or where the price is and whether it has gone lower than the previous price action. So essentially we're in October. Did the price go lower than the September and the August price ranges after the current point that we are in? So is there a chance that we would see lower prices from here, significantly lower prices that would warrant staying out of the market, waiting for bigger corrections? Or is it better just to have your plan and start to execute on that right now if the prices remain where they are or if they go higher? So something actionable that you can take away from the video. If you like the sound of that, make sure you are subscribed, and of course, like the video as well. It does help out a lot. So there's October, that's where we're sitting, and the election week, and then 4 weeks after. From the low of that week to the high of the 4 weeks after the election week, 89% move. Pretty significant run there to nearly $20,000 from the previous cycle. And also, here is October. There is your low in August and September. The market didn't go lower than those points. So we've seen a low now for August, and we've seen a higher low in September. We're potentially putting in another higher low now for BTC. So that's what I'm talking about there. There is August, there is September, and we've just seen a low on the date there, the 3rd of October. So pretty similar to what we've seen in the past when you look at the lows being formed on the chart. So prior election, let's have a look here. You've got, that's the week of the election. That is 4 weeks prior, which is where we currently are right now, and 4 weeks after. In terms of a percentage from the low to the high, 28%. Did October, anytime throughout October, go lower than the price lows of August or September? You can see for yourself, it didn't. You had a low there in August. Surprise, surprise, basically exactly the same thing happened 8 years later, which is now. We had a low, a very significant low, a panic low in the first week of August. You remember? It was the yen carry trade thing going on. Everyone thought that that was it. The market had to implode. There is your August low, and we are a long way up from there. Now for the 2012 election, here is the grey line on top of Monday 5th, because it's the first Tuesday of the month, and of course the week before wasn't the election. Here is election week. You can see 4 weeks prior, 1, 2, 3, 4, which is where we currently are, and 4 weeks after. What does that look like in a percentage from the top to the next top? Because it did go slightly lower over those coming weeks. It was about a 10% move on the price from the top to the next top. If you want to look at it from the week of the low and then to the high, it's a 28% move. And for the entire range, if the market for us from this point was to go down for the next 2 weeks, that low to the 4 weeks after the election is a range of 39%. Call it 40% for a nice round number there. So a few different numbers I've thrown out there. In this case, it did go lower for a couple of weeks leading up to the election, paused, and then took off from that point. So pretty significant moves there. But again, the price of Bitcoin was a measly $10 and then ran up to like $13 or $14 as well. So a lot lower prices. Using the data points of the last 3 elections, obviously we would love a few more data points, but that's what we have to work with. Using those, we can forecast forward a couple of these percentages, 28, 28, 89, giving us an average of about 48%. So let's just have a look at the lowest readings there. And I said somewhere around 80 grand at the beginning of the video. I'm not going to claim that it has to be that, but I like the look of the next 2 months from this point forward being positive overall for Bitcoin. It could go lower. We know that. We saw that on the 2012 election. But let's just have a look at 28%. Where does that leave us? Well, 28% takes us from the current price at about $80,000. So $79,000, $80,000 is where it would take the price of Bitcoin. If we were to go to 89% from today's prices, thereabouts, 89% is about 117. I don't know if that's likely. I don't think it's likely, but I don't know for sure. But that was the last result that Bitcoin had in 2020. It went up 89%. Now, I feel like that seems absolutely crazy. So I want to measure it again just to make sure. Here we are. There is a low of October. There is the last week there. So going forward those 8 weeks, 89%. Went from 10.5 grand to nearly $20,000, hitting that new all-time high. So in terms of where Bitcoin currently sits, anything is possible. I'm not saying that it has to do that. So let's have a look at the average between the two. If we take, from the current price, about 62K, going up about 48% would be roughly around $92,000. So if we look at the median, well, you've got two numbers there of 28. You've got the highest point there at 89. You've got an average there of 48, somewhere around 92. So it's a pretty wide bracket, 80 grand, 92 grand, or about 117 grand. Overall, each of those times have shown a positive result. The most important lows to remain above are the 49K low and the 52K low, with our 50% level still running through at roughly $56,000. So that's the low there to the high, which is a range that Bitcoin has been respecting throughout this entire correction. I don't think it's going to fail now. Anything can happen, of course, but it doesn't seem like it wants to fail now, especially after two of the most difficult periods for people. The August collapse of the yen carry trade, and then the September crash for whatever reason they labeled that. And then, of course, we had the October correction over the last couple of days with the missiles being launched from Iran into Israel. And each of those occasions, the market has been holding up at higher lows. Now, I've got heaps of other charts to get through, but I'm going to leave that to a video tomorrow. So make sure you are subscribed on the channel. The main thing from this is if anyone is waiting for significant pullbacks, by significant, I mean coming under probably your 56s or $50,000, probably very unlikely. And I think most of you aren't doing that. But to the flip side, to the bullish side, a lot of the data is suggesting we might start to see a runaway move sooner rather than later, probably in Q4 of this year. So if you like the sound of that, obviously hit the like button. I've got a few photos here for anyone that's hung around this long. A few photos of the renovation, looking at the kitchens, the bathrooms, the ensuite. The stones come out really, really nice, and the timber staircase that has some nice battens and light fittings and stuff like that. I've picked all of that out, and yeah, I think the result looks absolutely amazing. I'll show a few more of that on my Instagram. You can find a link to that down below in the video description, and of course the X link as well. Thanks again, guys. More coming up for cryptocurrencies. I'll see you in the next video. Until then, take care and peace out.